stock to flow was going to break. It just didn't make sense. It was exponential forever. And so it was mathematically not feasible. If you believe that Bitcoin's price follows a power law, then you can actually calculate how much capital injection you need, over the next year, if you then take some kind of ratio in terms of the multiple. Because we know that for every dollar that goes in, that you get a bump in the market cap that's some multiple of that. We like it when gold picks up because it means down the road a bit, Bitcoin's going to respond, but it seems like gold responds earlier than Bitcoin does as liquidity picks up. So if we drop 40% below median, today, that would be down around 50,000. But a year from now, it would be 42% higher. So Wall Street wants you to diversify, they want to collect fees, they want you to trade. We say be stoic. Bitcoin is stoic at its core. The core power law is very, it just keeps chugging along.
Hey guys, welcome back to the show. Today I'm here with a special guest, Stefan, which is a public speaker and author of 2 well-received books on cosmology and astronomy. Also, you have a strong background in high-performance computer. We're going to talk about it. MIT in physics and a master PhD in astronomy from Harvard University. Stefan, how you doing, man?
Oh, great to be here and to meet you, Maurizio.
Can you give us an intro and tell us a little bit about yourself?
Sure. Well, after spending a few years in astrophysics research, I moved into the high-performance computing field. So I spent 3 decades in that field. And I used to travel to Milan quite a bit. I was based in London for a while. Mostly I was in Silicon Valley, but I've also been based in Tokyo and in Singapore. And after 3 decades, that was my last corporate position, and I was ready to semi-retire. And I've been doing consulting in the technical computing field and technical marketing for over a decade now with Orion X.
Wow, that's incredible. And how have you found Bitcoin? How have you discovered it?
It was natural for me to have an interest, I think, because of having been in the computer industry for so long. And I don't know exactly how I came across it, but I decided that one of the domain areas that I would look after as an analyst at Orion X, in addition to things like, high performance computing and AI and quantum computing and space and energy that we take an interest in, I just thought, well, I should take a look at blockchain, crypto, and Bitcoin. The other analysts at the company were not, and I wanted to have something that they didn't have their hands in and I could sort of have to myself. So I did that, and I read the white paper early on, and that's what red pilled me or orange pilled me was the white paper itself. Because once I saw the Poisson equation as to how the security grows with the blockchain as you add additional blocks, it gets exponentially harder with every block you add, as you know. And once you've got 6 blocks in, it's really, really hard to crack. So that for me was the aha moment that, gee, this is a beautiful design. And so, I first started purchasing Bitcoin in 2014, and not very large amounts, smaller amounts. And I went through the same rabbit hole with looking at other, altcoins, as we sometimes call them. It took me really until 2017 to become fully a Bitcoin maximalist. It was the block size wars that did that for me. I was happy to get the dividend in Bitcoin Cash, and then sell that later. But once I observed that, and I had done quite a bit of analysis at that point, then I became really a Bitcoin maximalist at that time. And I found the power law, which had been discovered by Giovanni Santostasi in 2014, I believe. And I stumbled on it in 2019. It was a tweet by H.C. Berger, a Swiss guy. He had a chart that went along with that. And then I had been doing some other modeling. Of course, I looked at stock to flow, and I looked at an alternative to stock to flow because I saw that stock to flow was going to break. It just didn't make sense. It was exponential forever. And so it was mathematically not feasible. So I tried to build something that was would taper off, that looked at, instead of the what we call the differential, look at the integral. It's like you have a mine and you're saying how much is left in the mine, in the gold mine, and tried to model that. And that was way too conservative. And then I saw the power law. And so I've been, working with that ever since. I did do one modification, which is, would it saturate at some point in the far future? And there's a function you can use. It's called the Weibull function. And you can test and you can see, is it on a power law or is it going to flatten out at some point along with this Weibull? So far, it doesn't. So far, the power law, you can look at all the detailed statistical parameters, of which there are quite a few, and the power law performs just as well as any of the Weibull options, whether you set it at 3 trillion cap or 10 trillion ultimate cap or 100 trillion ultimate market cap or so forth. So we have a lot of momentum, shall we say, behind the power law, I believe.
I love this, and it must be so interesting for someone who has such a beautiful background as you, like study the cosmos, the universe, which is kind of math, but I
math.
think, right?
Yeah.
And then you can see the reflection of the mathematics into Bitcoin, because Bitcoin is pure math, right? So there must be something maybe that attracted you to look into the formula, look into the code. Have you ever looked into the code as well, or you just stopped at the white paper?
Well, I've just looked at sections of code, but not deeply really. But I've understood the principles of how the code works. I mean, I understand the Nakamoto consensus and the fact that it's 3-layered and it's tripartite governance, and it's just such a beautiful design.
Don't trust, verify. I love that too. There has been a lot of speculation on the fact that computers are going to become smarter and smarter, so-called, and this quantum computing is something we can patch, is something that is going to present in 10 years, 20 years from now. What's your view here?
Yeah, well, there are two fundamental things to look at. One is the blockchain itself, which is a hashing algorithm, and the other is the wallets and the addresses, the private keys on the addresses, and those are completely different algorithms. Shor's algorithm is the one that could attack the wallets. The wallets are safer than they used to be. They've added some safety into them so that you don't expose addresses all the time. You only expose them when you're moving Bitcoin, from one address to another. Hashing is extremely difficult. There's really no good quantum hashing algorithm that's going to break that. I did a calculation that said you can't break it in the next 50 years. But there's quite a possibility that the wallet addresses could be broken within the next decade by quantum computing. To do that, you have to have of order 1,000, 2,000, 4,000 logical qubits. Well, right now we're at about 1,000 physical qubits, but these systems are so noisy that with 1,000 physical qubits, they can only produce 1 or 2 or 3 logical qubits. They just had this big announcement from Google of the Willow, and there have been some other recent announcements. Willow put a lot of qubits onto a single device, but they basically used all of those in order to create one logical qubit. So they have to go a factor of 1,000, and they have to improve in various dimensions, not only the noise that allows them to scale to higher logical qubits, but they need to have faster clock rates. They need to have more density. So the challenges are great, but it's important to prepare. And there's a BIP, there's a proposal. It allows for multiple quantum safe algorithms, and the National Institute of Standards and Technology has approved several algorithms. So it's not too early to get ready. And it's going to threaten the entire financial system, not just Bitcoin. Everything's built around SHA-256 and similar security, and would be subject to the same sorts of attacks.
If they can break Bitcoin, which is one of the most secure network, if not the most secure network on the planet, what happens to everything else? To your bank account, to your Gmail account, to your normal passwords, to your bank account. So I think finding a way to patch it. And am I correct to assume that even if they find a way to patch it, still the 1 million Bitcoin in Satoshi's wallet, they could be taken?
That, that has the old system where it's more exposed. So that is the first target that anybody would have. We would see that happen first. So it's the canary in the coal mine, if you will. And people would know not to move their Bitcoin. It's addresses before about 2012, 2011, 2012 that are more exposed.
I am assuming, by the way, based on my understanding, that the 1 million Bitcoin was left there as a bait, saying, okay, see if you can take it, right? So I'm not sure, but even if that will happen, when that will happen, I think there's going to be enough strength in the market to absorb it. I mean, we've seen Michael Saylor has gotten to 500,000 Bitcoin. I think it was yesterday, the day before. So the demand is about to increase. I believe we are still hovering around $2 trillion. It's a baby. When that happens, I think the market will be ready to maybe absorb it.
Well, I agree. And if you believe that Bitcoin's price follows a power law, then you can actually calculate how much capital injection you need, over the next year, if you then take some kind of ratio in terms of the multiple. Because we know that for every dollar that goes in, that you get a bump in the market cap that's some multiple of that. And it seems to be over the history a number something like 2.5. This MVRV statistic, right, which is all the money that's spent to get to the price point that we're at, which is about 2.5 times the market cap of all the price point that we're at. So if that stays roughly constant, then over the next year, you need an injection of 800 billion of new capital to keep things going on this sort of power law trajectory, which is very steep. It's almost the sixth power of the age of Bitcoin, which is the square of a cube. I mean, it grows really fast.
Do you think it's possible to predict price movement with math? How accurate do you think it's going to be?
Well, I think it's accurate with the warning that it's got high volatility. And I can go into that. I've got some slides that we can present on the power law.
I just want to say thank you for preparing this beautiful presentation for us. So really appreciate it.
My pleasure. As this picture of Buckminster Fuller when he was being interviewed in 1967. And somebody tweeted and said, well, he predicted Bitcoin in 1967. So he was 42 years ahead of his time. And what he said is, by the year 2000, there will be a realistic, scientific accounting system which is not gold of pirates. Wealth is energy, and wealth always increases. Well, Bitcoin is encapsulated energy, encapsulated through the cryptographic hashing process, which is a double SHA-256 hashing algorithm, different from the algorithm used for addresses. So not directly is subjectable to quantum computing for a long, long time. So I added to that with a tweet, and I said, the first completely scientific standard ledger and first direct from energy monetary system for enumerating wealth appeared 42 years after Bucky Fuller's prescient statement. Unbounded energy into absolutely finite Bitcoin, a huge amount of energy, but not enough to, take down all our electrical grids, but a substantial 19 or 20 gigawatts constantly into a completely finite capped monetary system. And that's superior to little energy that's used to create an exponentially growing fiat money supply. And it's also superior to all of these proof of stake altcoins where there's very little energy injected. This is the first scientifically precise monetary standard ever in the history of humanity. The underlying power law is the proof of work. It's just energy, power times time. We convert 19 gigawatts every block, 10 minutes, at the rate of 800 exahashes a second. So you can calculate, 600 times that. And an exahash is a billion, it's 10 to the 18th. So that's 10 to the 20th plus 3 more orders of magnitude. They're 10 to the 24th sets of calculations. It's not a single calculation. It's a set of a couple of dozen, shifts and other integer type calculations that are being done for every single block by the world's largest decentralized global supercomputer. And this is why I've been interested in Bitcoin for, over a decade now, because I have this supercomputing background. So this is the most powerful decentralized supercomputer on the planet. Now, most finance algorithms, most financial assets follow sort of exponential growth, kind of constant compound annual growth with volatility. The stock market, the US stock market, like the SPY, S&P 500, goes up 10 or 11% per year, roughly, with, variation. And it stays on that path over long periods of time. The money supply doubles every 10 years. M2, that's about 7%. And over long periods of time, it kind of stays on that same track. It's exponential growth. Exponentials have a time scale associated with it. The equation goes as some constant times the exponential ratio of the time that passes over this characteristic time scale, which is, in this case, not your doubling time, but the time to grow by a factor of e, the base of the natural logarithm, 2.78. Power law doesn't have the same form. It's some constant times time to raise to some power. And that could be squared, cubed, or whatever for the power law in question. If it's gravity, it falls off as 1 over r squared. If it's the electromagnetic force, it falls as 1 over the square of the distance between the two charges. Bitcoin increases as nearly the 6th power of its age. And so it's on a log linear plot, it has a different characteristic. On a log-log plot, it has a different characteristic. So if you look on a log linear plot, it's a straight line, it's more like an exponential. If you look on a log-log plot and it's a straight line, it's more like a power law. I like to sometimes look at the power law model versus gold because people say, well, what about inflation, And yes, the gold supply has inflation, but it's very low. It's less than 2%. You can fit the same kind of power law through gold. So this has a log axis where it goes from 1,000th of an ounce to presently about 30 ounces per Bitcoin, right? 90,000, 3,000, that's about 30 ounces. So just a little bit less than that. And the green curve is a power law with index 5.4. So it says Bitcoin, when measured in gold ounces, grows as the 5.4 power of Bitcoin's age, not gold's age, which has been around, and growing exponentially for thousands of years, but Bitcoin's age. And it's a really good fit. It has an R squared of 94 percentile. And the projection of this is that around 2033, it would be at 400 ounces, which is a good delivery bar, the kinds of bars that the central banks like to hold. And that would also be at 400 ounces times 21 million, that would be 8 billion ounces. And that exceeds all the gold, above ground on Earth, which is about 6 billion ounces. According to the power law, we'll pass gold, around 2032. It's not far off.
Well, that's really interesting. Sorry to jump in. So basically, this is saying that in 2032, we will do a 10x. So Bitcoin is going to go from 2 trillion to 20 trillion. Is that correct?
That's correct. We double the next couple of years, and we roughly double the couple of years after that. And then it goes a little bit more slowly because that's the way the power law works. It'll take more like 3 years to double. 7 years, 2 doubles is a factor of 8, so pretty close to the factor of 10. This is a model-free chart. Bitcoin has been following a power law, not an exponential. It certainly has not been following an exponential. All I did was take the average monthly return of Bitcoin, and that's the orange line for each epoch. So the epoch 1 is up until the first halving, and then the second halving, and up until the third halving, and then the fourth halving, which was less than a year ago. And you see that it monotonically drops, and it drops, quite substantially, right? From one epoch to the next, and now it's dropping at a somewhat slower rate. But it's also, actually, that curve actually can be fit by a power law. And then the volatility is the blue line, and it has dropped as well, quite dramatically. So the next slide shows what we call a quantile regression. If you do an ordinary least squares, that's kind of what I showed you before, but in a log linear plot, this is a log-log plot. So this is where you really see what's going on, where you have the log of the Bitcoin price here denominated in gold, and the log 10 of Bitcoin age, where age is in years. So on the x-axis where it says 1.0, that's when Bitcoin was 10 years old in 2019. And now we're at 1.2 1.2, 1.25 in log terms. And these quantile levels, they basically divide things up into the lowest 5% and the highest 5%. The median is a kind of purple line, which is fairly low at the 0.5 quantile as it's labeled. And you see the lowest three quantiles and even the median 0.5, they all bunch up down at the bottom. That's what we call the power law base or the power law core. And that's what carries the long term. And then above that, we develop these bubbles from time to time. And there are four major ones. And they occurred in 2011, 2013, 2017, and 2021, which is a double bubble. And they took it, up to these higher quantile levels. And they climb sort of exponentially and they fall sort of exponentially. But they always come back to this power law core base. And in this particular regression, it's a 5.6 power law, slightly higher than the one I showed you before, but pretty similar.
Is it correct to assume that they are kind of diminishing as more as we go higher, the less we would see them popping off?
That's what we've seen, yes. The peaks come down in terms of the number of standard deviations. We've also seen the standard deviation get smaller as you go from, which was the previous chart, as you go from one epoch to the next, or era to the next. That's the blue line.
When there is an object in force in the beginning, it swings more and then kind of stabilize towards maybe a price. I think this is my interpretation of the Bitcoin price action, which is going extremely volatile, but I think at some point I would expect volatility to diminish.
Yeah, precisely. And it's a good lead into the next slide. It's like the difference between the relative wave height on a small body of water and on a large body of water. You have a lot more depth with the large body of water, and the waves are just on the surface. So I observed that Bitcoin has this sort of yin and yang characteristics, where the yang is the power law, that's the core, that's your male strong energy, your solid rock and trees. And then the bubble phases are a little more emotional, a little more yin, and a little more chaos and volatility. And we actually see this in our own fluid flow inside our aorta, inside our blood vessels. And that diagram is showing flow that happens really every heartbeat within your aorta. It changes from this sort of steady flow, laminar flow. There's a transition zone, and then it gets more turbulent. If it gets too turbulent, you've got heart disease. Maybe you've got arteriosclerosis or something that's blocking and causing the turbulence to be even worse. But in healthy individuals as well, you're going to have this turbulence because the pressure, that's being driven during that phase of the heartbeat is much higher. The chart below is the histogram. Now, once you remove the power law and just take the residuals, and these are the residuals on the x-axis, it's the size of the deviation measured in log terms. So if you're able to read log 0.5, it's log 10. That's a factor of 3. That's a large factor relative to log of 0. And what you see is when you map the residuals, how many occur, that's the histogram, that's the height. How many occur is a function of how much deviation away you have from the power law. Then you get this kind of bimodal distribution, which we sort of saw before, but this shows it more clearly. You have this power law curve, and then you have this bubble zone. So that's, again, the yang and the yin. Next slide shows it a little more explicitly.
The Tao of the Bitcoin price. I love this.
We have both a chart for dollars on the left, the big one, and for gold on the right, the smaller one. And we see these dual Gaussians in both cases. So the green curve is the core, the red curve is the bubbles. There's some overlap, that's the transition zone. And we see that it extends really a very large amount. It goes up to log 10 of 1.0. So your highest points are, a factor of 10. Now, this is over the whole history. We don't expect that necessarily to be happening now, but it certainly happened over the whole history.
What do you think will happen to gold? So let's say if Bitcoin is going to 10x from now, would you expect gold to stall a little bit, or would you expect more money going into gold? Would you expect gold to still go higher but at a smaller pace?
Exactly. The correlation between Bitcoin and gold over the past 8 years, using long time scale data, kind of monthly data, is 87%. It's pretty good. But Bitcoin clearly moves a lot more. They both respond to liquidity. And we're seeing right now that gold tends to also kind of front run Bitcoin a little bit. We like it when gold picks up because it means down the road a bit, Bitcoin's going to respond. But it seems like gold responds earlier than Bitcoin does as liquidity picks up. And it seems like global liquidity is now picking up again. So this is just, I asked ChatGPT, what do you think about this laminar turbulent idea? And it seemed to agree, laminar flow, stable, ordered, it follows the power law. Transition zone, unstable, higher momentum breakouts, increasing volatility, but not fully turbulent. And then when you get into the bubbles, they're chaotic, high energy, and it grows exponentially above the power law and eventually collapse. So that's our sort of high level model for things. And that little chart we're going to show on the next slide so we can move on. So this is what happens again if you subtract out the long-term power law and just look at the residuals. But now we've broken them into 3 zones. So in the red color, we have the most volatile, which is the highest 40% of the residuals or the variations above the mean line. And then the green is the lowest 40%. And the yellow is the middle 20%, which is the transition zone. And so a few things you can observe. For the bubbles, we see the 4 distinct bubbles here. And now we've got the age in linear years, so it's easier to see the pattern for 2013, 2017, 2021 bubbles, so roughly 4 years apart. These lines are sort of running another best fit through the bubbles only. And then the banded sort of pastel red shows how wide the ranges are for one standard deviation. And you see the bubbles are very sharp, peaked and then fall, and very distinct. And then the yellow transition zones are pretty distinct as it enters into the bubble phase. Sometimes you'll get a fake out and it doesn't follow through, but generally it follows through in both directions. And in the green zones, the volatility is much less, much lower. Now this chart was built at the end of last year. And what we see is that in dollar terms, there's a red dot at the very end. And that means Bitcoin was entering, when it went above $100,000 late in the year, it was starting to enter the red zone, the full bubble zone, but it's fallen back, right, as we know. So it's back in this transition yellow zone. It's a little bit above the median, which right now would be around 81,000. So it's just a few $1,000s above that now. Now the next chart is for gold. It's the same thing, but for Bitcoin measured in gold. Now this is interesting. You see the same peaks, right? You also see the peaks declining as you observed before. And that happens both in dollar terms and Bitcoin measured in gold terms. We see these same sort of transition zones. The broad visuals look similar, but the details are a little different. And one of the details that's different is we never entered the red zone with Bitcoin versus gold. So to get confirmation of the bubble, we'd like to see Bitcoin versus gold enter the red zone. And to do that, I estimate that it needs to get to about 40 ounces, which right now would be $120,000. So I'd like to get to 120,000 or so to get some real, and we would re-enter in dollar terms, of course, but I'd like to see it confirmed relative to gold as well.
Would you expect still the same pattern? So once we enter into the so-called red zone, are we going to stay and peak and stay for a little bit?
I would expect. I mean, it's not guaranteed. We had one out of cycle with 2011. We had 3 that were sort of cyclical. 3 is not a huge number for statistics. So we don't know. And we know that liquidity matters, and liquidity doesn't follow a 4-year cycle. It seems to follow more like a 5-year plus cycle, according to Michael Howell, who's one of the world experts on this. And that's related to the rollover of debt and the sort of average term of debt, both corporate and government debt, around 5 years. It could be delayed, but it looks like there needs to be a liquidity cycle. And there's expectation that the Fed will have to ease. There's expectation that at some point they'll have to return to quantitative easing. With their last meeting, they did announce a decrease in the quantitative tightening. So that is a sort of pseudo quantitative easing, just in negative terms, by lessening the rate of quantitative tightening.
My two Satoshis here by observing those dots, which are, by the way, super interesting and fascinating. Thank you again for sharing it. It looks like there's going to be more activity towards the dotted line, like more aggressive up and down instead of swing largely and have a space in between. Kind of expecting a more aggressive consolidation towards the median line, I guess, which is going to indicate, like you said, under 120 and maybe a little bit less volatile in the matter. Are you expecting Bitcoin still to follow the 4-year cycle? Because you mentioned liquidity goes in 5 or 6 year cycles. So are we breaking free from these 4-year cycles in your mind? What do you think?
I don't know. I don't know. I mean, it's been a year to a year and a half after the halving when the peak has occurred. But, the impact of halvings has decreased. And I think the relative importance of liquidity has grown. And you would expect that with more institutional investors, that they would be paying more attention to that. And also you need larger amounts of capital. So it's not surprising if there's some handoff away from the having more liquidity domination. Could be regulatory, could be funding the strategic Bitcoin reserve. There are lots of possibilities.
The current administration in the US, at least, is favoring Bitcoin to, push forward. The SEC is more friendly. Of course, there is a ton of talks in regards of the strategic reserve, as you mentioned. So I think having such an open legislation, it will impact the price one way or another. It's funny, everyone is expecting this to happen tomorrow, but it takes time. Patience is key.
Okay, so this is not precise predictions, but this is just a few levels and roughly when they might be expected to occur. And all I've done is I've taken that quantile regression that has those different probability levels, and I've sort of munged it around so that you look at it in terms of the year, the percentage chance of reaching a certain level by a given year, and then bands for different price levels. And those are 300,000, a million, 3 million. So you would say, based on those quantile regressions, that there's roughly a 50% chance of reaching 300,000 by 2029, which means I also don't think it's going to happen this year. It could happen with the big bubble, it could, but this is reflecting more the core growth of the power law. And for a million, 2033 is this 2034 is sort of the 50 percentile, but there's a 25% that it happens a year sooner. That's kind of how you would read this. I do think 10 million is inevitable. Michael Saylor thinks it's 13 million by 2045. I think it's 9 million. We're not that far apart from his base case. So.
I heard the same argument when it's gone from $100 to $1,000, $1,000 to $10,000, $10,000 to $100,000. People say, it's not possible. So again, I mean, when you look into this asset with a short mindset, you are gambling. Whether if you spread your buying and your time frame into years as opposed to weeks, it's math we are talking about, right? So
it's a factor of roughly 50 every time the age of Bitcoin doubles. So that means if we're 16 years now, then an additional 16 years, it should be 50 times 80,000. It should be over 4 million, 16 years from now. This chart is about how much Bitcoin should you have in your portfolio. Are you familiar with the Kelly optimization criteria?
Was it Sena that talked about it?
Sena might have talked about that, yes. Okay, well, that's what this is about. This is the past 10 years, from 2015 through 2024 full years for 16 major asset classes. Bitcoin, of course, is at the top. It won 8 out of 10 years. There's never been an asset like that. And as we know, Bitcoin can also be at the bottom, which it was for 2 years. So given these numbers, what does that imply about how you should size Bitcoin in your portfolio. And Kelly analysis is one way of doing that. If people have heard of Claude Shannon and information theory and the entropy of information, Kelly was a co-worker of Claude Shannon at Bell Labs in the 1950s, and he published, he derived from Shannon's information theory classical Kelly criteria applied to a series of bets. And it's really simple model. And all you have to do is take each of the 10 years of numbers. The only proviso is you have to pick a window, a time frame. And you have to rebalance. And am I going to rebalance every quarter or every year or wait 2 years or once a month? And the answer for Bitcoin is you're better off waiting. If you wait longer, Kelly will tell you you can own a bigger fraction. So that's in the next slide. I've got 8 assets here because 16 of those 16 assets, 8 were bonds. We don't care about bonds. They don't return very much, right? So these are the other 8 assets. And the way that Kelly works is, and I don't have time to go into the derivation, but you look at 2 things. One is what percentage of the window intervals do you win? And then by how much do you win them by? So if you're betting, what fraction of the time do you win your bet? And then what's the payoff ratio? Do you win twice as much as you lose? Is it an even bet? Do you win 3 times as much as you lose? Well, over its history with Bitcoin, it's been 4 to 1. And you won 80% of the time. I just showed you won 80% of the time. And if you take the percentages and add them up, those 10 percentages, and then just take the 8 wins and divide and take the average, it's really high. It was 292% was the average win size. And the losses were big. The average loss size was minus 70%. But the ratio of the average win to the average loss is 4.2. So you just plug it into the formula. Plug in the frequency of win, which is 80%, and that's the P. You plug in the frequency of loss, and that's 20%, which is 0.2. But now you divide it by this B, which is 4.2. So 20% divided by 4 is 5%. P is 80%. 80% minus 5% is 75%. And that becomes the fraction of your portfolio that you want to devote to Bitcoin if all you're looking at is Bitcoin and cash. So if you're just looking at Bitcoin versus dollars, that F value says 75%. Now, if you assign an interest rate to the cash and say the risk-free rate is 4%, it lowers it from 75.2% to 75%. It doesn't lower it at all, hardly at all, because it's so strong for both the P factor and the B factor. And you calculate value for all these other assets, and the second best asset was broad tech, and you get 66%, but once you put in 4% interest rate for risk-free, it's 60%. Small caps, it's negative. You didn't want to put your money into small caps versus a 4% risk-free rate. Large caps, it's positive. That's not surprising. It gets a pretty good 40% allocation. Real estate, these are REITs. It's negative. Gold, it's small. It's 0.36 without the 4% risk-free rate, but that lowers all the way down to a 9% allocation, which is not unusual. People might put 5 or 10% into a portfolio. Commodities, very negative. You didn't want to be in commodities, certainly the last 10 years. International equities, negative, according to the Kelly criteria. 0.2 before you apply the interest rate, but quite negative after. Now, if you say, well, Bitcoin, the first few years, those were really special years. We'll never get those back. Let's just look at the last 5 years. Well, I still win 80% of the time. And it still says 0.71, 71%. And if I correct for the 4% risk-free rate, it lowers it all the way to 70%. So if you only bought one asset, you buy Bitcoin, keep the rest in cash, put it in T-bills, put it in, 5-year bond, I don't care. If you want to put a couple of other assets in, things get more complicated. So what would we pick? Well, out of interest, we would pick either broad tech or large caps, right? And as we know, there's a lot of overlap between those two. So if you put all three in, and then you add gold, because that's the other interesting one probably. Then you have to take those three numbers and then you have to reweight them. And if you reweight them, then Bitcoin ends up at 52% of the portfolio, broad tech ends up at 42%, and gold at 6%. You can also do a Bitcoin gold portfolio, and you can tell it would very heavily favor Bitcoin with this classical Kelly.
This is really interesting. Sorry to jump in, because the other day you tweeted something. You said when you diversify, you are protecting yourself against ignorance. Basically, it makes little sense to know what you are doing. So Bitcoin only would have been a better choice, mathematically speaking, right?
It's been the best asset class.
There you go. There you go. You have it here. I haven't even seen it, but I've seen you tweeted it. There you go. Perfect.
So this is it. This is our closing quote. Diversification is protection against ignorance. It makes little sense if you know what you are doing, Warren Buffett. Now, Warren doesn't know what he's doing when it comes to Bitcoin, right? He's never understood technology. He's always said he doesn't understand technology. He does own a lot of Apple because he couldn't resist it. And, he's done okay the last couple of years, but his average over the last 10 years is 12%, 12.8%. So he should have just sold everything and bought Bitcoin. So Wall Street wants you to diversify, they want to collect fees, they want you to trade. We say be stoic. Bitcoin is stoic at its core. The core power law is very, it just keeps chugging along.
It was so interesting, by the way, because I love to talk to Giovanni, by the way, which is a fellow Italian. I've seen a bunch of videos where the British hodl is breaking spaghetti, and there was a debate with Fred Krueger, which was super funny. But I've never actually dived into the power law. So I reached out to Giovanni, but he never replied. I'll try harder maybe on another channel and see if I can catch him. If we indeed are following Fourier cycles or any projection in math, there's going to be another drop at some point, right? Let's say we go into the red zone, into 120, 150, whatever, we just pop up and then we drop down again. Do you know top of your head what the bottom would be? It would be where we are now, would it be lower?
Yeah, so top of my head, the median for these quantile regressions is 81,000 right now, so we're just a little bit above. And I've made an estimate for what the standard deviation should be this cycle. Last cycle, it was about 0.24 in the log, and that's about a factor of 1.7 multiplicative. So you have to multiply up by 1.7, but then divide by 1.7. You divide by 1.7, you get 0.6. So that's like a drop of 40% below median. So if we drop 40% below median, today, that would be down around 50,000. But a year from now, it would be 42% higher, right? Because the power law keeps chugging along. So if you add, 42% to 80,000, that's 112. You multiply that by 0.6, that's 67,000. So if it happens a year from now to drop down to roughly one standard deviation, which is kind of where it tends to bottom, that could be 67. I doubt it would get to 50. Depends on when. It depends on when it happens.
Exactly, and that would make sense because I would argue the volatility will diminish in both ways, right? We're going up less, but we're also going down less. So historically speaking, we've seen corrections of 80%, 70%, but we've also seen pop it up like crazy. So since we are popping off, let's say less, we will technically go down less. So again, going to the example we gave earlier where it's going to stabilize moving forward. You have an asset which is technically going up, mathematically speaking, and your risk to gain, it's not even up for debate because the chance is going higher. It's much more higher than the chance it's going down. So no financial advice, but it makes sense to consider starting investing into Bitcoin because it looks like it wants to go higher.
It's what we call skew or convexity. It's got this big right tail. That's convexity. That works in your favor. Or right tail skew. And I've shown that it's a whole separate second Gaussian that sits out there pretty far in the right tail. So
Thank you so much for letting us explore your wonderful brain, and thank you for the beautiful presentation. If I can let people download it, I'll put the links in the comments.
That's fine. I'd be happy for you to do that.
Okay, thank you then. So then, of course, guys, if you wish to download the presentation that Stefan shared today, you will find it in the description box below. So make sure to click and download it. And yeah, I wish I can have you back on the channel, man, because I would love to ask you many more things. So maybe we can do another catch up in 3 months or so.
Okay, that's great. It's been a real pleasure, Maurizio. Really have enjoyed it.
Likewise, are you attending any events? Bitcoin Prague, Bitcoin Vegas? Are you going to the events
I don't
this year?
travel much. Oh, I traveled so much during my career and my corporate career, and lived, in 5 countries. And now I'm settled, and I have 2 young children, and I'm very busy raising my 2 young children, taking them to school and picking them up. That's my whole schedule is built around that.
Thank you again so much. Guys, thank you so much for watching, and we'll see you on the next one.
Sure.
Cheers.